Hello traders, and thanks for making this far in the course. From now on, the course will officially begin because up to now we only covered some general stuff regarding prop firms and the overall course introduction, and we will start with the most important and well discussed topic in the trading community, which is risk management. So don't neglect this aspect because as I will say later on in the course, risk management is more important than your strategy and your trading plan, because it's the aspect that dictates if you will stay funded or if you'll pass the challenge or blow the challenge or blow your funded account. So our main purpose as traders is not to make money, get rich, and buy Lambos. It's to protect our capital and not to lose trades. So look at it this way. So when you open a trade that sticks to your plan, your main objective is not to lose money on that trade. Your next objectives will be to manage that trade accordingly in order for you to get profit. But the first and foremost aspect is that you should not lose money on that trade, and this is why I started with this thing, this aspect, because capital protection is paramount. Now adapting the risk management discussions onto the prop firms here, as you heard from the previous lessons, prop firms have strict risk management limits that you have to adhere to. So most of them have, let's take for example the FTMO, which has a 10% maximum drawdown, which means that if you lose 10%, then your challenge or funded account will be lost. So be sure to adapt your strategy to these conditions. If you have a strategy that has fewer entries, risk 1%, maybe 2%, but if you have a strategy that has lots of entries, or if you are a scalper, I recommend you not to go over 0.5% per trade. You may say that this is a little amount to risk, but these sums add up. And again, our main objectives as traders is not to lose money, so not to lose the initial fee and not to lose money on the funded account. After you do this, you have to develop and stick to your plan. So as I said previously, you're a scalper. Okay, then you decide to risk 0.2% on a trade. Stick to that. Don't alter that sum, even if situations dictated, as I will cover in the next points of this slide. But the main purpose of this slide is to make you a bulletproof trader with a solid mindset and a trader that knows how to manage losers, and how to manage winners. If you're not familiar with how much you should risk on a certain number of lots, because this is a topic that I saw is quite hot online, because you have to know how many lots you have to open in order for your risk to match your stop loss value. So feel free to look up online for position size calculators. I listed a few here. So babypips.com has a nice online position size calculator. And if you don't want to have many tabs open or other browsers open, you can find expert advisors for MetaTrader 4 and 5 that can calculate your position while you are in the application to make sure that you are risking the fixed amount on your on the stop loss that you decided. Now this is a tricky part. So I previously said that you have to stick to your trading plan, but you have to go astray a bit from that. But it's a bit counterintuitive here, because the human mind works exactly in reverse of what I said here. So you have to increase your risk when winning and decrease your risk when losing. So this is a thing that I would like to emphasize, at least on the risk management lessons. So our basic instinct is once we lose a trade to increase the risk so that we can get break even overall, and once we are on the winning side, we decide to reduce the risk in order for us to keep some wins in the bag and start a new day with the account in the green. But my experience taught me that you should do the complete reverse, because if you are up in a day, that means that that's a good day for you. You are in the flow of the market, you're seeing the moves of the market, and you can adapt accordingly. So those are the perfect conditions for you to slightly increase your profit in order to take as much as you can from the markets. And if you have some losers, there may be a mindset issue in the current day on your side, or maybe some market structure that is really untradeable and you keep trading it. So that should be the moment when you decrease your risk and limit your losses as far as possible. Again, getting break even is not our main objective. Our main objective is being profitable traders, but in the same time protecting our capital. So this is the main takeaway that I want you guys to have from this lesson. Protect your capital at all costs, and the profits come as a collateral effect. Never put profit first and increase your risk to adapt to making that huge profit. And the final point here, as I previously stated, keep track of market conditions and act accordingly. Look for news. Be in touch with everything that happens in the Forex environment, because there may be some important piece of news coming up and you may open a position which gets quickly liquidated. An important point here, some prop firms actually have restrictions in trading news. You have to check that for yourself. Make sure you checked all the prop firm conditions, because so many traders lose their accounts, their funded accounts even, by violating these rules of trading while important news happen. So as a takeaway from this lesson, as a summary, again, we are traders and our main objective isn't to make money in the markets, is not to lose money. So keep that in mind. Capital protection is paramount. Adapt to the conditions that you are getting offered by the prop firms. Develop and stick to a trading plan with a certain risk level depending on the frequency of you trading. Use the correct tools in order to analyze and calculate your positions. Be greedy when winning and be humble when losing. This is an important point. And always be aware of your environment, because this may as well make a difference between a winning and a blown account.